We're half an hour away from the open in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne. Our top stories this morning. The renminbi in focus as the PBOC says it will move to prevent the exchange rate from overshooting. Asian stocks range bound in early trade after Wall Street's longest losing streak since January. President Biden steps up his campaign rhetoric against China, threatening higher steel and aluminum tariffs and calling the country xenophobic. And investors awaiting TSMC's earnings and its capex outlook, the key to potentially extending a $340 billion stock surge. A quick look at the market action. Looks like we steered clear, maybe away from these Powell comments for now. At least the Treasuries market certainly did overnight, and that's why we did see a bit of a rally and yields dropping across the curve here this morning. Interestingly enough, that didn't really quite help the tech sector in the U.S. We saw quite a bit of a hit when it comes to the NASDAQ, and we just talked about the S&P as well on the longest losing streak we've seen since earlier this part of the year. At least NASDAQ futures are turning a little bit positive now in the Asia session. Asia's looking a little bit mixed here today with Japan down. Korea, though, there you go. You're seeing that sort of a rebound in that market. Taiwan coming back online here, and we're still down about 0.6% at the get-go. But we're watching that 3% drop when it comes to oil markets. That certainly is one concern. Obviously, the disappointment around the industrial numbers out of China. Also, U.S. inventories continue to swell, so that certainly did lead to a drop. We're seeing that, and we're watching very closely what goes on with some of these China futures here today as well. Dollar-yen is 155, the new 152 for any sort of intervention risk here today. We'll talk about what the lines that we heard from the PBOC in just the last couple of minutes. And we're watching the chip sectors. We talked about the TSMC earnings, but what we heard overnight was the ASML results, right? Orders basically took a dive there. It seems like some of their customers, like TSMC, might be still working through some of their inventory before actually going through with some new orders. So that certainly is roiling parts of the chip sector here today. We saw the Philly Semiconductor Index fall some 3% overnight. It's a mixed picture across Asia. Chip makers here today as well. But we're seeing SK Hynix just slightly declining. Aventis is still doing quite well here today. China futures are like this, so we're slightly on the back foot after that rebound that we saw across Greater China. Stocks yesterday, 724 for dollar China. So the moves that we're seeing is interesting, right? So obviously we talk about the PBOC with the fix and how they try to at least dictate where the market goes. But these lines coming through are quite rare from the central bank on WeChat, talking about to prevent unilateral consensus on the renminbi, also talking about not wanting the exchange rate to overshoot. So potentially you could say it's a bit of jawboning from the PBOC here today, and they really don't want this trade to be a one-way bet, especially when you have a U.S. dollar that seems to be on a rampage right now, or at least holding on to the gains. But we did see a bit of a drop there overnight as well. In terms of what to watch, of course, those tariffs that we just talked about when it comes to President Biden, considering anything on aluminum as well as steel, also this probe on the shipbuilding industry. So we're watching some of these ship makers, some of the miners here today as well. Also, we're watching very closely that HSI below that 50-day moving average. There's a safe press briefing happening, I believe, in this hour, and some numbers to tell you about whether it's a jobless rate or the FDI data out of China. So certainly it's a bit of a quiet day overall. But let's get to, of course, what we've been hearing overnight with President Biden was at the U.S. Steel headquarters in Pittsburgh, and he had some strong words on China.
They've got a population that is more people in retirement than working. They're not importing any. They're not bringing. They're xenophobic. Nobody coming in. They've got real problems.
I want to bring in my anchor buddy now, our chief Malaysia correspondent, Stephen Ingles, joining me for the next 2 hours again. Today, and it seems like the campaign rhetoric is on. He's speaking in these swing states that supporting U.S. steel is very important. Yeah. But the consideration and thought of tariffs on Chinese steel aluminum, how big of an impact do you think that's going to have? Well, the analysts that we've spoken to say it's going to be minimal impact, actually, because it's about $1.7 billion worth of U.S. exports from China exports to the United States, a small sliver of the overall market. So the economic impact will be minimal, but this is a political
political statement, according to one analyst that we talked to. And again, there's a lot to unpack with this Biden stump through Pennsylvania because of the U.S. steel potential acquisition by Nippon Steel, the Japanese. Biden saying it's not going to happen. But again, he's kind of competing with Donald Trump on who's going to be tougher on China. So a 25% tariff on steel from China. Okay, yes, that's a good headline number, but is it going to be really have a tangible impact? There's so many other things here as well, as far as the probe into ship making.
Yeah.
China has come out and blasted that as well, saying that statement from Biden was full of false accusations and based on the need of political domestic purposes. So a lot to unpack and a lot to kind of take with a grain of salt as well.
Yeah, I mean, especially with the shipbuilding probe as well. That the analysis from our BE says that it doesn't really stop that much from other. You can go through Japanese ships or other vessels to come to the U.S. versus getting a fee with a Chinese ship. So it doesn't really actually help the U.S. shipbuilding industry either. So as you mentioned, it's more symbolism than anything.
Yeah, and keeping jobs in the United States, and it also does tie in to this Micron story as well, tied to the Chips and Science Act. They're trying to, of course, keep manufacturing or lure manufacturing back into the United States. TSMC, of course, building factories in Arizona. Micron has plans for 4 in New York, as well as 1 in its home state of Idaho. They're throwing $6 billion. We're going to talk about that more in detail later. But again, he's on the political stump right now. November is coming quickly. Yeah.
Okay. Certainly that's going to be something that's going to be front and focus for investors as well. Let's bring in our guest, Helen Ju, now Managing Director and CIO at Trinity. It's good to see you, Helen.
Morning.
How are you looking at this U.S. election and how this is going to play out across markets throughout the year?
Well, I think the election is definitely top of mind, and certainly most people think that Trump is likely to win. So I would say that in terms of U.S. assets, people are looking more short-term. They think that basically a lot of the pro-growth policies that Trump might bring in, like extension of some of the household tax breaks that were implemented in his prior administration, those are probably going to be more positive for consumption, services, et cetera. Over the medium to longer term, there might be some negatives in terms of geopolitics, tariffs, and certainly a lot of uncertainties. Risk premium might go up globally, but people are not thinking necessarily that far at the moment.
Yeah.
It's really just focusing on some of the fiscal benefits between the tax extensions and maybe a little bit incrementally higher spending on things like defense.
Now, is the Biden administration picking the right fights with China in your estimation? I mean, there's overcapacity issues, what Janet Yellen came. We're going to get more rhetoric coming next week with Anthony Blinken is heading to China. Now we have Biden essentially calling China xenophobic and also, raising the tariffs on steel. It's not as high, of course, as what Trump is proposing of tariffs of up to 60%. I mean, is this all noise to you who look at the numbers, or does it have a significance?
Well, unlike the impact on the U.S. market, where people are looking at the positives in the short term and kind of just, fading out the longer term potential uncertainties, I think for the rest of the world where they might actually be negatively impacted, like China, for example, China assets are certainly reacting negatively to a lot of these campaign slogans early on in terms of valuations, if not necessarily in terms of actual earnings forecasts or GDP revisions already. I would say that it's something that's very difficult to ignore for the time being because it is so frequently in the news, and it's going to be top of mind for the next, 6 to 9 months. So I wouldn't write it off, but a lot of it, like you said earlier, Steve, I think is really symbolism, right? So, for example, not only is the steel export tariff applying to a very tiny percentage of steel production in China, but a lot of the earlier talk about EV tariffs into the U.S. I mean, China barely exports any EVs into the U.S. at all. So, you can talk about it, and it's probably good for campaigning, but the actual fundamental impact is not that big.
Well, is there overcapacity? You and I talked about it briefly. I mean, we talk about capacity utilization at factories overall is about 73.6%, according to latest numbers, down from 75.9. Does that indicate to you that there is overcapacity?
Well, there has been overcapacity in the world and in China for quite some time, so I think that's nothing new. And cyclically, if you actually look at PMIs, manufacturing industries, et cetera, over the last couple of years, whereas consumption and services has been on a tear upward, the rest of the world in terms of manufacturing and PMI has been on a down cycle, right? So utilization is naturally coming off. But as you mentioned, it's not falling off a cliff. It's not going down by a huge number. There is probably still too much investment globally, and there's probably going to be capacity utilization problems across the board in some sectors in particular, but it's not something that can be addressed or rectified, within a short period of time anywhere.
Yeah, I want to get to the discussion, which is basically on the Fed and the sort of the comments that we heard from Jay Powell of delaying rate cuts from the central bank. I mean, it's basically pummel risk assets here. Do you think that this is quite problematic, or do you think the market's just overreacting at this point?
I think the market's, gotten very jittery, and year to date we've seen the rates moves being much more volatile than we would have anticipated at the beginning of the year. I think the Fed has made it very clear that the rate cut path is going to be more dependent on inflation rather than purely on growth, right? That's the more important of their dual mandates at the moment that they have to focus on. In terms of the inflation number that scared everybody and sent yields up pretty massively over the last week, is really the transportation segment that beat in March. And that breaks down to more auto insurance, which, is so obscure and idiosyncratic and jumps so much during the month that it's really very difficult to predict whether that sustains over the rest of the year or not. If you recall, in January, the owner's equivalent rent had a big pop as well, but then that faded out very quickly thereafter. So the market's getting very excited and very concerned over one or two prints, plus this geopolitical, intensification over the past few days. But really, oil price is so high that I don't think that there is going to be much further pressure from this, because once you hit 100, there's going to be demand destruction. So maybe the market's overreacting a little bit, and I actually think that the market now pricing in, less than even 40 basis points of rate cuts this year, maybe has overshot a bit to the opposite side.
Okay.
Okay.
Do you think then how many is it more realistic then? Could we still see rate cuts the second half, and how many?
Well, I mean, the Fed, dot plot at the end of March is basically looking for still a little bit more than that, right? Probably 3 cuts this year. And recall at the beginning of the year, people were looking for 160 basis points of rate cuts this year, far, far more versus what the Fed was expecting. And now people have swung opposite to the other side, saying that the Fed is totally wrong and there's not going to be any rate cuts, all because of, a couple of little data points on the inflation side, some of which could be reporting or other type of reconciliation anomalies. So I think it's a little bit too early to jump to that conclusion, and the dollar has overshot as well on the back of this and put significant pressure on emerging market, Asian, and basically all non-dollar currencies. So I think probably over the next couple of months we have a little bit of a normalization of expectations back closer to where the dot plot looks.
Does that put the whole U.S. exceptionalism case still intact then for 2024?
Well, I think personally, I believe that the dollar is probably nearing the peak again in this mini cycle, and I do think that we'll have a bit of a pullback. I think the growth is still quite strong, but if you actually look at the rest of the world that relies more on manufacturing PMIs, actually we start to see an inflection in that since a couple of months ago, whether it's China, whether it's UK, Europe, excluding Germany, everything is creeping up a little bit. So if the rest of the world starts to have better fundamental growth and narrows the gap against the U.S., I think that might, even things out a little bit. And if the Fed path is not quite as hawkish as what the market is forecasting today, I think that even things out a little bit as well. So I think now is actually a pretty good time to diversify your exposures away from just the U.S. as the only game in town.
All right, Helen, hold on a thought. We'll have more from Helen in the first half hour of the show here, Managing Director and CIO at NF Trinity. Of course, we're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. Futures looking like this here this morning. It looks like we're watching very close to that fix, of course, on the back of those comments from the PBOC. This is the China Show. All right, that fix just came through here, and we're talking about something that is steady this morning. So 710.20. So a third day we've seen it at that 710 level. And so, again, after easing the grip on the renminbi earlier, and we're not seeing a whole lot of movement when it comes to dollar China here this morning. At least the dollar has stabilized a bit as well. We saw a bit of a drop overnight, too. That certainly is helping the PBOC breathe some air this morning. Let's get to our scoop now. Bloomberg has learned that U.S. memory chip maker Micron is set to get more than $6 billion in grants from the Commerce Department. Let's bring in Bloomberg's Mackenzie Hawkins, who broke this story for us. Mackenzie, great scoop. First, tell us a little bit more about what you learned.
So Micron next week is going to become the 7th company to receive an award from the CHIPS Act, which is Washington's and the Biden administration's massive program to bring semiconductor manufacturing back to the states. Micron's the largest U.S. producer of computer memory chips. It's set to receive $6.1 billion in federal grants as well as some loans also from the CHIPS Act to support projects that it's building in New York and in Idaho.
So what does this mean necessarily for their other endeavors? I know they still have ambitions in China and elsewhere, but 4 plants in New York, 1 in Idaho. Is essentially this grant money, in addition to maybe some other in loans and loan guarantees from the CHIPS and Science Act, will that be specifically just for those U.S. plants?
Yes. So all of the funding from the federal government for all of the CHIPS Act awards is tied to specific projects. In Micron's case, this is actually going to mean that of the 4 factories they're building in New York, there are 2 that are going to be starting production in 2029, 2 not until 2041. We are hearing that it's very likely that their award is only going to fund the first 2 because the Commerce Department wants to prioritize projects that are going to be up and running by the end of the decade. And the firm, of course, has significant international ambitions as well. That's a big part of the conversation for Micron and its competitors as governments around the globe are racing to build out their semiconductor capacity. And so a lot of the pressure on the Biden administration has been get the money out the door faster because Japan is doing this, the EU is doing this, South Korea is doing this, the Middle East is getting into the game. And so we've seen a real spate of major CHIPS Act awards over the past month. Micron will be the 4th award above $6 billion announced. It's been 1 a week. We've been on a pretty quick cadence recently. Been keeping us really busy.
All right, maybe we'll see you next week, Mackenzie. Thanks so much for bringing that story to us. Mackenzie Hawkins there, our U.S. industrial policy reporter, joining us out of San Francisco with her scoop. Focusing on the chip sector as well, TSMC is going to be front and center. Expected to report a rebound in earnings growth later on today after demand for AI chips helped propel its bottom line. Let's bring in our senior analyst for Bloomberg Intelligence, Robert Lee. He's with us now. What are you expecting out of TSMC today?
Okay, as you're aware, Taiwanese companies report monthly sales. So we've already seen the sales numbers for January, March, hang on, get my dates right, January, February, March. So the Q1 sales came just above the mid-range of their guidance. So that's an initial good sign, isn't it? Clearly driven by AI, although we lack the detail at the moment. So I think the expectations going into the numbers which will be reported after the market closes today are quite high. However, we've seen the weakness, incremental weakness coming through from Apple. TSMC have never disclosed exactly what percentage of sales come from Apple, but on our best estimates, it's roughly 20 to 25% of their revenue. So it's quite a big portion of revenue, comes from Apple. So that's one question mark. Second question mark is, you may have seen the overnight news on ASML.
Yeah.
So ASML's EUV orders came in below expectations. So whilst that would have no impact whatsoever on TSMC's coming quarters, is that a sign of, incremental caution coming in future quarters?
Well, is that a big issue, obviously? I mean, the EUV equipment from ASML doesn't go into China anyway, right? That's the extreme ultraviolet machinery. But how does it basically reflect that, Taiwan chip makers, they're working off their inventories?
Yes, I think it really has no bearing on either TSMC or the industry for this year, given how full their order books at the moment. But it is a forward-looking indicator and may have some implication as to what's going on, into 2025. But as we know, the story's being driven by AI. I mentioned a couple of cautious things there on Apple, etc. But clearly, NVIDIA and AI is what's driving the story. So I think overall, the numbers should be fairly decent, but also the expectations are very high. So I think if the outlook and the guidance for the company doesn't quite meet or beat, more importantly, those very high expectations, given the stock is trading at quite an interesting technical level, and given the backdrop of weakness we saw in the markets in recent days and overnight, then, we may not get another leg up. We'll have to wait and see.
All right. Bloomberg Intelligence's Robert Lee on everything when it comes to chips and, of course, TSMC, what to expect later on this afternoon. Still with us is Helen Ju, Managing Director and CIO of NF Trinity. Obviously, AI is still that big, crazy story, but the tech cycle seems to be bottoming out in Asia as well. I'm just wondering, can tech still be a big leader in markets this year?
I think that tech has been really driven by the AI story. And last year, originally, we looked at really just the NVIDIA's, the pure plays performing well. And then later on in the year, as those really took off, then a lot of the peripheral names that are maybe just, minorly exposed to AI started to catch up in a pretty significant way. And now I think those have gone up quite a lot as well. And expectations, earnings forecasts, et cetera, have all been revised up pretty tremendously. So I think you're going to have a lot more dispersion in terms of return. It's not like everybody in the entire space is going up together and to their historical peak multiples. The other thing I think people have to watch is, if a company is really only 10% or 20% exposed to AI, does that AI part continue to beat expectations? And can you actually see that the 20% becomes 50% or 80%? If it doesn't happen, or a particular company is not gaining that much share, or maybe the take-up is slightly slower versus already lofty expectations after a whole year of upward revisions, then we might actually start to see some misses in profit-taking, more on derating and valuation hit than anything else.
All right, Helen, more from Helen Ju there, NF Trinity Managing Director and CIO. Futures are pointing slightly negative here this morning when it comes to China. We're down about 0.25%. We're watching very closely some of those lines from the PBOC as well. Seems to be doing its job right now and trying to at least stem some of the declines in the currency too. We got plenty more ahead. This is Bloomberg. All right, it's a pretty slow start when it comes to the pre-market in Hong Kong. We're flat on that benchmark. HS Tech is slightly on offer here today. So are 8 shares and 724 for your dollar China trade this morning. In terms of analyst actions to tell you about, there's a bit of a calls here when it comes to Lenovo. That's raised to a buy at DBS Bank with a price target of $10. Guotai Junan Securities are focusing on some of these brokerages as well, just given some of the news flow. 8 shares raised to buy also at DBS. And we're watching the luxury sector as well, with Prada raised to an add at Alpha Value Beta as well. So that's one to watch here in terms of stocks this morning. We're focusing a little bit more on the chips as we talked about. So when it comes to the CapEx outlook, when it comes to some of the sales and all that, we're watching very closely TSMC. It seems like right now we're still seeing a pretty mixed picture across some of these Chinese chip makers as well. SMIC is doing okay. ASMPT, though, is slightly lower, but also watching what goes on after those disappointing results from ASML as well. Steel, aluminum producers, that's certainly one we're watching as well, just given just what we've been hearing on potential tariffs that the USTR is considering here as well. Not a whole lot of movement, but Chalco, there you go, as well as Hongqiao are down about more than 1% this morning. And we're watching some of these casino operators in particular when it comes to Sands China. We did get some disappointing results when it comes to Las Vegas Sands overnight. They did talk about maybe there might be a slow recovery in Macau. Of course, they've been dealing with a lot of renovations and the like there, but not much movement in the stock here this morning as well. So certainly it's pretty quiet overall, if you could say. So you could take a look at the renminbi. That's certainly still going to be the big focus here. So a third straight day that we actually have seen that fixing above 710. So the PBOC certainly sending those messages in the last few minutes about, they don't want the currency to overshoot. They're watching that it's not just a consensus sort of way of looking at the currency. So certainly that's helped stabilize dollar China at 724 this morning. The open is next. This is Bloomberg. Welcome back. You're watching the China Show. We're counting down the opens of markets in Greater China, and we continue to see a pretty slow-going day on this Thursday morning. Futures are slightly in the back foot here, but we're flat when it comes to the Hang Seng market. And dollar China still to be very much in focus. Looks like we're taking a bit of a breather here today amidst what we've been talking about. The dollar also taking this rally. Also hit the pause button overnight as well, just given the fact that we've moved away a little bit from some of the Jay Powell comments and concerns about higher for longer, the like here. So Treasury markets are slightly bid up here this morning. That's certainly helping some of the sovereign bond markets here this morning as well. Tech very much in focus, though, because despite yields ticking lower across the board, tech did have a massive sell-off in the U.S. overnight. Doesn't seem like we're seeing that quite follow through here in the Asia session. If you take a look at some of these markets like the Kospi, that's still doing quite well and rebounding here today as well. So here's your open right now, and we're slightly seeing some declines when it comes to the onshore market, the CSI 300. We're seeing declines about 0.4%. Hang Seng is pretty much flat. HS Tech is on offer. We talked about TSMC. That's certainly going to be the key sort of next big thing to watch among the chips here today. And we're watching still very closely those small cap stocks. So we saw a surge yesterday on the back of some of these comments from the CSRC. It looks like we're back seeing just some declines here this morning. And we're talking about 226 for your Chinese 10-year yield. Some stabilization in the currency. Shanghai crude, there you go. That's where we're seeing that drop of close to 3%, mirroring what we saw when it comes to Brent and WTI overnight. Obviously, the concerns also some disappointment on some of the data out of China, on March activity numbers, also excess inventories in the U.S. So that certainly did leave the markets to go, or at least oil markets to go down this morning. Iron ore, though, still catching a slight bid as well when it comes to Dalian futures. What you're seeing on the bottom of your screen is some of those job numbers out of Australia. We'll get to that in a minute. You take a look at the chip makers, though, just given what we talked about with TSMC earnings coming up. Then you got the ASML news as well. There you go. You're seeing broad declines for the most part here. Sunny Optical Tech, that's down some 2% this morning. Hua Hong Semi also down close to 1%. And we talked about, these tariffs that President Biden is proposing when it comes to Chinese steel and aluminum, this probe into Chinese shipbuilding as well. Well, we're seeing a mixed picture across some of these shipbuilders as well, but aluminum producers like Chalco, for example, CSSC Holdings is down by about 1% to 2% here right now. All right, that Aussie job number coming through at the bottom of your screen there. So you're basically seeing slightly improving numbers from the jobless rate. So at least 3.8%, which is a better than expected there of a 3.9% was the survey. And we're also watching when it comes to the job gains. So basically job gains actually fell, I should say, to that number on your screen there. So we're seeing a little bit of drop on the Aussie here this morning. Not a huge movement when it comes to the Australia stocks, though. Still with us is Helen Ju, Managing Director and CIO at NF Trinity. We haven't talked too much about China. The currency certainly is very much in focus. Are we talking about a higher trading range now for dollar China, just given the moves we've seen in the dollar?
Well, I think whether it's China or Korea or Japan or Taiwan, a lot of the moves recently, year to date, have been driven more by the dollar than about the local currency in terms of local economy, local central bank decisions, et cetera. And actually, if you look at the RMB year to date, it's depreciated, but we're talking about a couple of percentage points versus a lot of these other Asian currencies are down high single digits. So the PBOC has been working pretty hard to stabilize the two-way expectation already as it is. And like it is for China, like it is for a lot of these other countries, it's going to be more about the dollar for the near term.
What do you think an acceptable pace of depreciation against the dollar is? Because, of course, a weaker currency could help with the recovery, but at the same time, they don't want to have market volatility. They definitely don't want outflows.
Yeah, I think at this point, when the dollar has popped so sharply and abruptly within a short period of time, that you did see more intervention coming from the PBOC, just like we're suspecting some intervention probably from the BOJ as well. I think they are willing to let it depreciate a little bit more, but they don't want to do it in a defensive manner. They don't want to do it in a very surprised and very jerky manner. So some measured and calculated depreciation is acceptable, given that the RMB hasn't depreciated so much, but just don't let it be too, on the defense.
Not a one-off like 2015.
Oh, definitely not. That would not be what we need right now in terms of confidence and predictability.
And what about when it comes to CGBs? I mean, we talk about that record gap between the U.S. and China here right now. Is there more room for yields to head lower than there were there they are now?
Yeah, I mean, historically, CGB yields used to be higher than the U.S. for many years, right? And now the gap has widened by more than 100 basis points year to date. The CGB has gone from 2.6 to like 2.2 handle. Yeah. So it's been a very abrupt move just beginning of the year until now. I think that actually there is some room for the CGB yield to recover, largely because if you look at the data, right, the cyclical aspect has somewhat obtained a landing. Manufacturing FAI and infrastructure FAI are holding in okay. Property is still, down, but not down as much as last year. Exports still somewhat intact, et cetera. And you actually see a lot of major houses revising up their China GDP forecast for this year, maybe by 20, 30 basis points to closer to 5%. So if that cyclical landing does happen, then we think that the CGB could stage a mild recovery to like mid-twos, and that will actually take off some of the depreciation pressure as well and could really benefit some of the financial sectors that have performed very poorly this year because of that.
Yeah. Well, that leads to where is the best place to find yield in China as an investor right now? Because the GDP read was hotter than expected at 5.3%, but much of that growth was coming in the first 2 months of the year. Those March numbers, you mentioned them, Yvonne, they started coming down to retail sales, industrial production. So it's not clear whether that is sustainable. Where's the best yield right now in China?
Well, I think there's definitely some degree of, restocking, destocking, short-term cycles going on. I think if this global PMI pickup that we talked about earlier does happen, that's going to be very positive for exporters as a whole. So that includes, the likes of China, Japan, Korea, within Asia as an example. We think that in terms of where to position sector-wise within China. We still like a lot of the 8 or 9% dividend yielding, very stable, macro-insensitive sectors like the telecom sector that has already performed quite well. Financials, I think, has been really compressed because of the CGP yield collapse year to date. Insurance in particular, any kind of inflection there, I think could be a high beta recovery beneficiary. And I think some elements of internet as well, companies that used to have growth, trading at higher multiples, now kind of derated to mid-single digit PE, maybe mid to high single digit PE because people expect no growth or maybe even declines. Any kind of incremental acceleration on that front as the economy lands, I think could help on the re-rating front as well.
The next catalyst seems to be, everyone's talking about the third plenum. What are you expecting out of that? Are we likely to see any more sort of policy in terms of stimulus or any sort of maybe even market reforms, which seems to be a big topic these days as well?
I think the expectation towards the third plenum is minimal. Nobody's really talking about it. Nobody knows what to expect, and therefore it's definitely not priced in, but it has to happen sometime within this year. The thing to look for is really structural reforms and not just cyclical measures, right? Cyclical measures have been coming for quite some time, but to the extent that there are any structural reforms that can address the things that people are most worried about, LGFVs and leverage and property sector and demographics, any kind of surprises on that front, or capital markets reforms, for example, I think could be very positive towards a structural re-rating story. So last year, China was all about deflation, about de-risking, about deleveraging, and therefore valuations de-rating pretty painfully. This year, if there is some reform, some reflation, then I think that will help in terms of the overall medium-term re-rating story.
Where's the reflation going to come? Because, again, property market has been decimated so much, and they also, on the flip side of that, don't want to exacerbate the fiscal problems.
Well, we looked at it, and assuming that prices, stay where they are at the moment, by the middle of this year, the PPI will already start to turn positive year on year just because of base effects. Right. And CPI, I think, has some room to improve in the second half of this year as well. And last year for the CPI, a lot of it was really coming from very low pork and hog prices and agricultural things that have their own mini cycle that are somewhat unrelated. So I think just getting rid of some of that already helps quite a lot in terms of the headline numbers. Actually, if you look at volumes and core, it hasn't been so deflationary. It's just the headline, which weighs on sentiment a lot more and is attracting a lot more attention. That has looked a lot worse in terms of deflationary pressures.
Yeah, there's a lot of talk about these market reforms, whether it's about taking out some of these zombie companies and really more tighter supervision of this market. Does that only really benefit the large caps, do you think, or? We've seen certainly a big sell-off in some of the small caps of late.
It can benefit the small caps as well, but I think it varies a great deal which sector, right? Clearly, in an economic down cycle, when things are not doing so well, a lot of small caps with weaker balance sheets, lower market share, maybe less investment in R&D over the medium to longer term, they could suffer a lot more. So that's part of the reason why they fundamentally have not been performing as well. But I think the government also wants to groom a new group of small caps and mid caps and up-and-coming entrepreneurs, potentially a new sector that weren't necessarily, listed 5 or 10 or 15 years ago. So I think there's definitely a lot of innovation and a lot of new promise to watch out for as well.
All right, Helen, great to have you here this hour. Helen Zhu, Managing Director and CIO at Nanfeng NF Trinity. Coming up, we're going to have more on U.S. and European complaints about China's production capacity as President Xi pushes back. We're talking more about the overcapacity concerns. Is there really overcapacity? Gong from the University of International Business and Economics professor joining us next. This is Bloomberg. Well, digital asset platform Greyscale says it's looking to ride the recent rally in crypto markets as U.S. spot Bitcoin ETFs attract more attention. The CEO, Michael Sonnenshein, spoke to us exclusively about the company's plans to expand its product offerings.
Spot Bitcoin ETFs in the U.S. were only introduced at the very, very beginning of the year. And so in the crypto world, what is about 3.5 months is in the real world about a full year of time. So it feels like they've been around for quite some time, but it's actually still a very new market. When we think about who is involved in Bitcoin ETFs today, it's still a relatively small audience. And so I think we're just at the end of that first phase of adoption before we start to see Bitcoin ETFs being adopted into model portfolios, making their way onto wealth management platforms, and ultimately being made available to a wider audience of investors.
And to reach that audience, what are you offering to compete with your rivals? When do you expect your fees to come down? Because if I'm right, they're some of the highest.
Yeah, well, so the Greyscale Bitcoin Trust, ticker GBTC, is the world's largest Bitcoin ETF, and we've been around since 2013. When I look at how the product has matured over time, for many investors, it's been a fantastic investment. It's returned over 49,000% since inception, making it the best performing publicly traded investment product. But our focus on Greyscale, isn't just stopping with GBTC. It's about continuing to expand our product family. We recently filed for the introduction of another spot Bitcoin ETF, the Greyscale Bitcoin Mini Trust. So pending regulatory approvals, we'll be able to have multiple products in market to allow really investors to meet them where they are in their crypto journey, and ultimately have different products for different investors with different strategies.
That was the Greyscale CEO, Michael Sonnenshein, speaking to Bloomberg's Lizzie Burden. Let's get back to our top story now. President Biden is saying the U.S. may impose tariffs on Chinese steel and aluminum, and he was speaking on the campaign trail in Pennsylvania.
Look, right now, my U.S. trade representative is investigating trade practices by the Chinese government regarding steel and aluminum. If that investigation confirms these anti-competitive trade practices, then I'm calling on her to consider tripling the tariff rates for both steel imports and aluminum imports from China.
Well, President Xi Jinping is pushing back against that claim. State media reports that Xi is saying to the visiting German chancellor this week that China's export of EVs, lithium batteries, and solar products have enriched supplies to the global market and eased inflation pressure, as well as made a great contribution for global efforts to tackle climate change and green transition. Joining us now from Beijing is Gong. He's a professor at the University of International Business and Economics. John, it's always great to have you back on the program. When it comes to this whole overcapacity issue in China, how big of a problem do you think it is? Where are we seeing that overcapacity, John?
Well, I think it's a more nuanced picture. At aggregate level, if you look at the total capacity utilization, China's utilization level is actually on par with the United States and as well as the European Union, about between 70 to 80% overall manufacturing sector. But I think in some old industries, we call it sort of like a sunset industries, like steel, aluminum, cement, for example. These industries do display excess capacity, very much due to the slowdown of the real estate sector. But in these sunrise industries, especially in the alternative energy industries related to the climate agenda, there's absolutely no excess capacity at all. Let me give you an example. There's a new company here in China entering the automobile market, Xiaomi. You probably already heard about it. I mean, it's a big company in the handset business. They debuted their new car, SU7, about 2 or 3 weeks ago. And the car was, they sold about 80,000 new cars within 1 hour in their debut ceremony. I mean, 80,000 cars within an hour and a half. I mean, that's not access capacity to me. You have a good picture there, SU7. Yeah, that's the car I'm talking about. 80,000 cars within an hour and a half. I just don't think that there's access capacity at all. Another example, also mentioned in Janet Yellen's visit to China, that is the solar panel industry. I think this is also a great industry that I don't believe there's really access capacity. I mean, on the other hand, I think President Xi mentioned, the contribution to the climate agenda. This is absolutely true. The price of solar panels when it was invented in 1975 was $100 per watt. Right now, it's 20 cents per watt, right? I mean, this relentless price decline created a lot of opportunities for people, in Africa, in Indonesia, in these islands, who would never have access to electricity. So I think, it's a more nuanced picture, and we have to look at it in a careful way on a case-by-case basis.
Dr. Gong, Stephen Engel here. I think what you're talking about, that demand equation versus excess capacity in these new industries that Xi Jinping has really been pushing, the new three, EVs, batteries, and solar panels. I think factory utilization rates is much higher than what we saw in the first quarter. Overall, that was 73.6%. I think we're upwards in the 90 plus for those new, as you said, sunrise industries. But I think when Janet Yellen came here and talked about overcapacity, overcapacity. The side argument is that there's unfair subsidies being given to these priority industries. Is that the case from your vantage point, that they're getting too much subsidies, unfair subsidies from the government?
Well, we have to be very careful about what subsidies we're talking about. There are subsidies related to development of industry. In other words, in the product development stage and R&D stage, these kind of subsidies are offered by many countries. I mean, in the United States, the same thing. State governments provide incentives to attract companies to be located in their region. This kind of a subsidy is actually not against the law at the WTO. What the WTO's treaty on anti-dumping and countervailing treaty is about is export-specific subsidies. In other words, we ask this question: if electric cars sold in European Union's market versus here in China, is there a big cost? Is there a price difference? Costs over there are much, much cheaper. I don't see that at all, actually. It's the opposite is true, right? Now, when it comes to electric cars in the United States, I really believe this is a lot to do with presidential election politics. There's no electric cars being sold in the United States coming from China or from Chinese companies manufacturing these cars in Mexico at all. I really don't see, the Chinese cars made in Mexico crossing the Rio Grande at all. So,
but there are batteries.
I think
there are batteries coming through Mexico into China that are into the U.S.
Batteries might be the case. That I agree. Batteries might be the case. But for the most part, I really think Secretary Raimondo and Yellen were all talking about auto workers in Michigan. And we all understand how important the state of Michigan is in this presidential election.
So we're seeing these two sides basically at different arguments, right? However way you kind of look at it. How does this all unfold then, John? I'm just wondering, does this just strengthen the case for more de-risking and deglobalization in the global economy? How do you see this all sort of playing out?
Yeah. The way I see it is that the automobile industry is really very important to the European Union, to the American market, because the auto industry is more than just an economic problem. It's a political issue. It involves too many companies. It involves too much employment. And I think the issue really is about making a balance, not to destroy, say, American jobs, European jobs. So that's why I think this is an issue that can really be negotiated by the two sides. As a matter of fact, China's Secretary of Commerce, we call Minister of Commerce, went to the European Union a few days ago to negotiate with the European Union authority in this regard, and talking about Chinese companies establishing manufacturing in Europe. And I think that's probably the right solution. The auto industry, the entire auto industry in the world, is undergoing a big transformation. In that transformation, there are going to be losers and winners, and some companies will be gone, and entire manufacturing model will be changing to the electric car model, right? So at this point, I think several Chinese companies are standing at the forefront, and they are trying to make investments. And I think the issue is, how do you actually make that happen? Chinese companies establishing manufacturing in Europe. As an example, I was told that one Chinese company's plans changed from establishing a factory in Hungary to Spain. And I think there's a firm reason behind this, because Renault, Volkswagen has extensive manufacturing operations in Spain, and the Spanish government has a concern about jobs in Spain. And now there's a Chinese company going to Spain to create these jobs.
John, we're going to leave it there, but thank you so much, John Gong there, professor at University of International Business and Economics, joining us. We got plenty more ahead. This is Bloomberg. All right, checking some of the movers here this morning. When it comes to the HSI, we actually are seeing, for the most part, mostly up, 45 up, 34 down here this morning. And so it's a pretty kind of split picture here on what's really driving this market. But overall, it's been pretty quiet. We're watching some, of course, these aluminum, makers, these steel makers, these shipbuilders, and China Hongqiao seems to be the one that is actually selling off here today on the back of that news of potential tariffs from the U.S. We're down some 3.5% or more. PetroChina really kind of following that oil price and that steep drop that we saw saw when it comes to not just oil futures in China, but also WTI and Brent as well. It was more than a 3% drop, which we're holding on to those losses here this morning. The tech plays are also on offer, sort of following what we saw in the U.S. as well. JD.com, Meituan seem to be kind of the losers here on the board, and we're watching very closely what's been going on and driving the gains here. The likes of some of these insurers are doing okay. Shenzhou International Group is the clear outperformer there. We're up about 3.5%. In terms of your global macro movers here today, it's not a clear sort of sign, but at least you're seeing a little bit of recovery when it comes to these equity markets here today. So you look at Singapore, you look at Korea, you look at even the P comp as well are seeing gains of more than 1%. TAIEX, though, we're slightly on the downside here. We're still waiting those TSMC earnings coming out here as well. And Asia FX, relatively speaking, we're doing a little bit better. So the won's recovering a bit for another day. Peso is still holding around that 57 level. Thai baht, though, that's going to be one in focus here as well. Slightly still seeing that weakening here today. And sovereign bonds, for the most part, are catching a bid, with the exception of Indonesia. But you're taking a look at when it comes to what the Aussie 10-year yield, we're down some 6 basis points and really continuing this trend that we've been seeing across treasuries here this morning. Coming up in the next hour, we're going to talk Asia economies with Nomura as voters in India prepare to head to the polls, and with Prime Minister Narendra Modi looking for a third term in power. Plenty more to come. Welcome back to the China Show. Here's a look at the CSI 300 here this morning. We're seeing some moderate declines across the board here, down about 1/5%. But overall, it's a mixed picture. Hong Kong doing a little bit better than the onshore market here this morning, with the Hang Seng is seeing gains about just 0.5%. When we talk about how quiet it is out there here today, but at least we stepped away from some of the Fed narrative and really focusing a little bit more on earnings and the like here. So TSMC certainly is front and center here a little bit later on. U.S. futures are punching a little bit higher, so at least maybe that bodes well for the U.S. session a little bit later on. And we're seeing a bit of recovery in some tech-heavy benchmarks like the Kospi here today as well. We're seeing gains about 1% in Seoul. AXS 200 also catching a slight bid. Brent markets are certainly in focus. We're still extending those, or at least recovering a bit after that steep drop yesterday. Brent crude now at $87 as well. We're certainly seeing that across the China futures here. Iron ore is flat this morning. And yields are overall just slightly to the downside here today. So we're holding on to some of the gains that we saw when it comes to treasuries. That 2-year yield is now at 4.91%. That U.S. 10-year yield just hovering around that 4.5% level. So you got to wonder, have we reached the peak for at least the dollar as well as yields for the year? That certainly is what Helen Ju from NF Trinity seems to have suggested here as well. But then again, we're still seeing some recovery in yen, but we're still talking about 154 territory for dollar yen. We've also heard from some pushback, or at least jawboning from the PBOC this morning as well, talking about they don't want to overshoot when it comes to exchange rate. They don't want this to be a one-way bet as well. So that's helping at least some stabilize the currency a bit. But we did see a third straight day of that PBOC fixing above that 710 level. So we're trading around just below that 723.5 handle this morning as well. But we talked about the recovery in the yuan, even the rupiah just opening up here as well. So a little bit of strength coming through and recovery today. In terms of movers, it's the oil plays, just given that drop in oil overnight. So you're watching likes of Sinopec, CNOOC, which are some of the bigger losers on the board here in Hong Kong today. China Hongqiao, so watching some of these aluminum producers as well, just given the threat of tariffs from the U.S. as well from President Biden as he continues on the campaign trail. We're down some 4% for Hongqiao here today. That is the biggest loser here in Hong Kong. And some of these banks and financials are still doing quite well. ICBC, the like, up some 1% here this morning. We're checking treasuries as well. We talked about how, it seems like we stepped off that 5% level in the 2-year. So at 491 here right now, and yields overall here in Asia also following what we're seeing, that move in treasuries here. So it seems like right now we're focusing a little bit more on earnings, maybe more on the fundamentals than what we're really hearing from the Fed of late here. We're also talking about TikTok. So it seems like, obviously this whole concern about being divested and the like, we're hearing a little bit more from the company now, saying that this bill, which basically is going to go through in the next few days or so, along with this aid package to Ukraine and the like, it looks like it could actually pass through. So that's why we're hearing from the company potentially here, saying that this bill could trample free speech rights of Americans. And that was these comments here on that proposed U.S. House bill. We're hearing the company talk on X this morning, Steve.
Yeah, that's right. I mean, it looks as though, this could be fast-tracked through Congress. Mike Johnson, the House Speaker, plans to include TikTok divestiture legislation already passed by the House in a fast-moving aid package for Ukraine and Israel, and that the chamber is set to be clear by Saturday. And President Biden, speaking Wednesday, also said he would sign it immediately. So this could be happening really quickly.
Yeah, certainly that could be very interesting here. So we're seeing a little bit more movement when it comes to that law as well. We're also watching very closely what goes on. I mean, are we still talking about the currency here today? I mean, what do you think is still top of mind to you today, Steve?
Yeah, I think obviously with the little bit of job owning coming from the PBOC, they're wary of the weakness in the renminbi overshooting. And again, that could help. Obviously, a weaker yuan could help the recovery. We're going to be watching that.
It was a great conversation just now with John Gong about overcapacity. He said, where is the overcapacity? Maybe you're seeing it in these old traditional sectors like steel.
And that is something that we talked about a lot at the National People's Congress, with the finance minister and the National Development and Reform Commission talking about there's going to be overall fiscal belt tightening across the ministries and departments in China and the central government as a whole. But those key industries, those sunrise industries that Professor Gong talked about, we're talking EVs, batteries, solar, and the like. They're going to be not forcing, but encouraging the provinces and those makers of those sunrise industries to invest more, while other more traditional industries that are seeing overcapacity are going to see some belt tightening. So he was talking about EVs in particular does not have overcapacity. There's more demand than the factories can pump out right now.
Yeah, certainly it's interesting when you talk about subsidies, though, right? He says that might be a different way of looking at things.
Absolutely.
Well.
Yeah.
We're getting a few more lines crossing here. Obviously, with what we heard from Biden about this whole merger between U.S. Steel and Nippon Steel, and how he's still kind of reiterating that he wants this to be owned by a U.S. company. We're hearing more from the company here this morning, from Nippon Steel. And they're trying to at least clarify a little bit, saying that U.S. Steel's name to be unchanged after this deal, so it will stay as U.S. Steel. There'll be no plant closures and jobs to stay in the U.S. So at least allaying some of those concerns among those swing states like Pennsylvania, like Ohio, which, are looking very closely at this deal and hoping that those jobs stay in America.
The union is against it completely, keep in mind, and that's why Biden was there.
Yep. So maybe a bit more clarification from Nippon this morning. All right. We'll talk a little bit more about that and the geopolitics. Still ahead on the China show. We're going to look ahead to TSMC earnings due later on today, with analysts expecting a rebound in growth and investors paying close attention to its CapEx plans as well. This is Bloomberg. All right. Some of your North Asia is doing this here this morning. Seeing some, broadly speaking, a bit of a rally here. At least Hang Seng as well as the Kospi are standing out here today. Onshore, though, we're pretty much flat in Shanghai, the CSI 300. For more, let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage for us. And Garfield, we're still talking about the volatility that we're seeing across FX markets. At least we're taking a bit of a breather here today. But where are those dollar bears now at the moment?
The dollar bears, I think they're probably in hibernation, or at the very least, licking their wounds. And to some extent, they might have some reasons to feel a bit aggrieved by what's gone on with the Fed. The Fed, coming out with that guidance at the end of last year for 3 rate cuts, sticking to it, even in the face of the early going, as markets were starting to signal that maybe 3 might not be doable. And so then finally we had Powell capitulating this week to the idea that they might have to delay rate cuts further. He didn't specifically say they wouldn't cut 3 times, but he certainly endorsed the moves that were going on in fixed income markets to say that we'll be lucky to get 2, we'll probably get 1. And that kind of a backdrop and what is driving it, which is the extreme resilience of the U.S. economy and of the inflationary impulse there, that's driven the dollar higher against every currency. Even when you had the PBOC trying to hold back the declines in the yuan. You have concerns in Japan and Korea about their currencies. It's still hard to see the dollar turning downwards in a sustained way from here.
So Garfield, Steve Engel here. Obviously, central banks in this part of the world are trying to do what they can, if they can do anything, with that dollar strength as it relates to their currencies. Finance Ministry hasn't jumped in yet in Japan, but we did see PBOC sort of jawboning a little bit and saying they're not going to necessarily, or they're concerned by the overshooting weakness in the yuan. What do you think there will be more concerted effort by central banks in this part of the world, given that that timeline of dollar strength seems to be extended even further?
Yeah, it's very difficult for them because the fundamentals are operating so strongly against them. And I think that's why we haven't seen the Ministry of Finance come in Japan. They might be looking for an opportunity at some stage. If we do get a wind back in the drivers of dollar strength, the more likely outcome is actually that we're going to get a harsher rates situation in Asia. There's a lot of expectations the Bank of Indonesia will hike next week. There's a lot less anticipation that places like Australia and New Zealand will move towards rate cuts, even when in New Zealand's case, they've got a double dip recession. And there's going to be an enormous amount of focus all next week on what could come out of the Bank of Japan meeting. After the March meeting, when Ueda said, we've gotten rid of negative rates, but don't expect us to move towards rapid hikes, a lot of people have thought, okay, we can wait until June to worry about what the BOJ is doing. But now, next week's meeting is seen as being live, so that's going to extend that volatility potential for currencies across Asia in this situation.
Garfield, thank you. Garfield Reynolds there, who leads our Markets Live Asia coverage as well. And as we step back away from the FX side of things and look at earnings, TSMC is certainly going to be front and center. It's expected to report a rebound in earnings growth after demand for AI chips help propel its bottom line. Let's get to Jane Lahee Lee. She's our Asia technology reporter. She's with us here this morning. Jane, obviously with TSMC earnings, after what we heard from ASML and the disappointment there about new orders and that surprising drop that we saw, is that likely to be bad news for TSMC?
Well, that's what investors are going to be looking out for. ASML, they make EUVs. These are the high-end, very, very expensive, well over $300 million giant machines that make the most advanced chips. TSMC, of course, is one of the few very important customers for this machine. And so the question is, does this mean that TSMC's outlook for the chip market, especially on the advanced nodes, is not going to be as good as we expected? And so that's one of the key things we'll be watching for. Yesterday at ASML's earnings, when we looked at their sales, the booking numbers, Taiwan only made up for 6%, which was a big drop from previous quarters. So that'll be front and center, I think, today during the earnings.
Jane, how closely are we going to be looking at CapEx? Any kind of visibility on going forward, the spending, and that will give us clues as well as how long this AI chip cycle is going to last?
Yeah, that's right. And we're going to be looking for, what kind of other demand are we going to see in AI? Is the CAGR going to change for the growth outlook for that market? I don't think it will, but investors are going to be watching that. TSMC, 25% of its sales last year still came from the iPhone. So how is that going to balance out, considering Apple had quite weak numbers coming out of its China sales, not Apple itself, but various other sort of data that we've seen. And so the question is going to be, is the AI market strong enough to drive the earnings going forward when iPhone sales look not so great?
Jay, thank you. Jane Lahee Lee there joining us from our Taipei Bureau. You could also turn to your Bloomberg for more on this. Go to TLive Go to get commentary analysis from our expert editors once we do hear from TSMC and those results of that call that goes on later on today. Well, staying on tech now. So among China's goals is, of course, within the chip sector is self-sufficiency. We've heard from the Chinese government they're trying to push to foster more high-tech and innovation as well. There's been a pretty interesting report from Bloomberg Economics and Bloomberg Intelligence that's saying that those high-tech hopes do risk some trade blowbacks. Let's bring in our chief Asia economist, Cheng Xu. She joins us now. You've been crunching the numbers for us. Is Beijing's high-tech strategy working?
It appears to be working at some kind of early results seems to be suggesting that we know the government wants to push the high-tech advances for very important strategic purposes. We just talk about the supply chain independence. China certainly wants to improve that, and the property market is not doing great, and certainly government wants to navigate the economy away from the property-driven purposes, the growth. What we see is that the growth in the high-tech sector has been very rapid. Since 2017, the growth averaged 12% each year, and that's outpacing the overall growth of the economy. At this point, the high-tech sector is accounting for around 15% of GDP. That's quite considerable improvement compared to only a few years ago, from below 10%. And going forward, we can see the figure growing even higher, the share going up even higher.
The focus would be 19% by 2026 or thereabouts,
yes,
I believe.
Yes.
But with success comes greater pressure. And obviously in industries like EVs, where China is obviously selling it at a lower cost, and also the innovation has been quite good, there's going to be blowback. The more successful China is in tech, there's going to be blowback from established tech powers like the United States and Europe. Look, Europe is about to potentially put those tariffs on EV imports into the European Union. So how does China navigate those political blowback?
Yeah, certainly it's going to be very challenging. And you highlighted the external sort of constraints, as it were, blowbacks in trade, and also the U.S. And its allies quite targeted measures towards China's high-tech sector. Those are going to kind of slow down the progress, I'm pretty sure. But going forward, I think the government is essentially at this point is really to pour the money in, as it were. And one important aspect is really to stimulate the private sector's demand or enthusiasm in investing in high-tech sector.
Well, China can definitely, and it is, throwing lots of money at it. I mean, Xi Jinping has talked about tens of billions of dollars. But how successful can they be long-term if they do not have access to those advanced chips, the quantum computing, the advanced lithography equipment from the likes of ASML?
Yeah, certainly it's a great constraint. Bear in mind, those aspects are not kind of massive share in terms of the high-tech sector. If you look at the high-tech sector, there are many aspects. You know, you have the advanced shipments, and in terms of the sort of kind of lower end, sort of medium to kind of upper lower sort of chip industry, China is actually gaining. So in that respect, it's constraining, but it's not going to kill off the high growth, high tech sector growth. But what I see important is the private sector's involvement.
All right, Cheng, thank you. Cheng Xu there, our Asia economics lead there, talking a little bit more about China's high-tech strategies and really the growth potential there. We're taking a look at when it comes to the moves in the yen this morning. So we are hearing once more from Kanda-san and talking about how they've been having some joint calls with not just Korea but also Janet Yellen overnight, and a little bit more coming through in a statement now that the G7 does confirm that there has been excessive FX moves that is harming the economy economy. And so Yellen did acknowledge, of course, these worries over not just the yen, but also the won overnight as well. So that's why you are seeing a little bit of strength come through when it comes to the yen on the back of some of these comments, but it's quite marginal. We're still holding around that 157 territory here this morning. We got plenty more ahead. This is Bloomberg. We got some breaking news when it comes to Pakistan. The finance minister is speaking with Bloomberg here this morning and talking a little bit more about the government expecting to avoid a rupee devaluation for that IMF program. So that's certainly something that they're looking at, and they don't anticipate a currency devaluation as part of its negotiations with the IMF to unlock billions of dollars in lending to try to at least bolster the reform agenda there. So that's what we're hearing. While massive devaluations have accompanied some of these previous IMF loans with Pakistan, they're saying that there's nothing comparable should be necessary this time around. All right, we're checking also when it comes to oil markets as well, just given that steep drop when it comes to Brent overnight. And we are seeing a bit of a recovery, but we're still holding at $87 here. We were close to 90, basically, or at 90 just yesterday. So certainly it's a bit of a drop. Shanghai crude is feeling it here this morning as well. We did hear from Goldman Sachs' head of oil research saying that crude prices have already baked in significant geopolitical risks. Don Struven thinks crude prices could slide more without fresh tensions.
To explain the 2 to 3% sell-off, I think you want to point to two other factors. The fact that in an environment where the geopolitical risk premium is high, $5 to $10 per barrel, if you don't get headlines with a materialization of the geopolitical risk, I think the path of least resistance for that premium is to drift lower. Second, as you reported earlier today, there were some headlines that some of the marginal refiners in Asia are reducing their demand for crude because their margins have been eroded as a result of the rise in crude prices, sort of a self-stabilizing mechanism. And then I think those three catalysts were amplified by algorithmics, CTAs selling. And I think big picture, I think we're learning that in our central case of no geopolitical hits to supply, $90 per barrel should be a ceiling on Brent prices this year.
Are we underestimating that risk, though? So the headlines across the top of the hour was that, according to the U.S., Venezuelan oil and gas transactions must wind down now by May 31st. So they issue a new general license on Venezuelan oil and gas sanctions. That was lifted for 6 months to see if Maduro could kind of free up elections a little bit. And it looks like we're going to re-implement some form of that. At the same time, where there's going to be pressure on the administration to do something about Iran, which is producing, what, 3.5 million barrels of oil a day?
Yeah.
So, I mean, do we need to price this, though, back in a little bit more?
I do think that the current level of oil prices does incorporate a significant downside risk to supply, especially in countries in the Middle East and sanctioned economies such as Iran. I think one interesting observation is that over the last 2 years, supply in both Iran and Venezuela has increased a lot. You're up roughly 20% over the past 2 years in Iran. Of course, the geopolitical escalation in the Middle East and potentially also a change in U.S. Federal policies, I think, skew the risks to Iran supply to the downside. And our view is that the market is pricing in that downside risk to oil supply.
Well, that's what I'm curious about, because right now, I mean, you have Congress considering additional sanctions on Iran oil, and I'm wondering if that's even going to matter. I mean, if we know that the net effect of what the U.S. tried to do, particularly after the Russian invasion, kind of, I mean, to a certain extent backfired, if you will, what does additional sanctions do, if anything?
Mm-hmm. Yeah, I think you would have to see a very significant change in sanctions policy to see a large drop in Iran supply. It has happened before. Mm-hmm. In 2018, we saw a pretty big drop in supply in Iran. At this point, 80 to 90% of Iranian exports are going to China, to the Chinese teapot refiners.
How much does well, on that side, and particularly on the demand side coming out of China, how much does the health of their economy matter to that forecast?
So China continues to be the largest contributor to global oil demand growth in our forecasts. Roughly 1/3 of the solid 1.5 million barrels per day 24 oil demand growth that we forecast is coming from China. That is fast, but much less fast than last year. The reopening boost to gasoline demand is behind us, but the demand from China for petrochemical products, as they are ramping up their capacity to produce plastics, continues to rise.
All right, Goldman Sachs' head of oil research, Don Straven, then talking about, oil prices might be capped around 90 for some time, but we're certainly feeling that drop here today among some of these energy players. PetroChina, PetroChina down some 3% here this morning. China Oilfield Services also down close to 2%. So obviously, we're waiting for any sort of still response when it comes to Israel, when it comes to that Iran attack over the weekend, which is leaving us a little bit more on tenterhooks, but really focusing a little more on the fundamentals, that disappointing number coming out of China yesterday, too, in March. This is Bloomberg. Our colleague Dan kind of set it up pretty well, Sonal, that, central banks are really at the mercy of the Fed right now. Apart from just burning through their reserves, what options do you think central banks here in the region have?
Well, we sort of call it an eclectic approach. So the first line of defense is the FX intervention, burning some of the reserves, but also allowing a bit of FX flexibility. But this obviously is a stopgap measure. And if the pressures persist, then we think central banks will go through the second round of defense, which basically means activating some of the macroprudential tools as well as capital account measures. So these could be measures on trade for exporters or importers. Central banks also have many other tools in terms of hedging ratios, etc. So there are these lines of defense that are available to Asian central banks. In the worst case scenario, of course, we're talking about tools like using interest rate hikes as defense to manage the currency pressures. We still think we are in the very early stages, and therefore it's really the first line of defense that has been activated. Fundamentals in Asia are much, much stronger today compared to 1997. I think Asian central banks should be able to manage the pressures that are coming through.
Okay, I wonder though, this dollar strength wasn't supposed to happen this year, Sonal. The fact that the G7 has come through with this statement, a joint statement, is really joint intervention likely, and how effective do you think it could be?
I think, as Daniel pointed out, it's a bit more tricky, but from a signaling standpoint, it is quite important. It does suggest that this is becoming a bigger issue, and we could see intervention come through. At the end of the day, though, if we look at country specific, so for instance, in the case of Japan, the question is whether BOJ is going to actually move faster than expected in terms of its next rate hike. Nomura's baseline currently is for the next hike to actually come through in October, and we are expecting the Fed to actually start easing in July. So if we are right in terms of those forecasts, then it's possible pressures ease off. But I think at the end of the day, intervention can just buy us some time. We will need to see some moves on monetary policy or activation of the second round of defense across Asian countries.
So now, how do you expect central banks to respond, and what could be sort of the policy risk now? Is it that you cut before the Fed, your currency comes down, and you see money flows back into the U.S. markets? You have then this issue of importing inflation again, or is the bigger risk pushing back those cuts and risking growth?
So at this stage, we think it's more likely that we will see the rate easing cycle get delayed, and the extent of cuts Asian central banks deliver might end up being less. And of course, activating the first and the second line of defense. We do think it's important to differentiate between Asian economies, though not everyone is in the same boat. So when we think of Indonesia, where FX is BI's top policy priority, if we do see a sharp IDR depreciation, then it's possible BI responds with a hike, although this is not our base case. But for the likes of Thailand, where the growth inflation dynamics are quite weak, and Thailand does have more than sufficient FX reserves to actually tackle currency issues, we do think there can be some decoupling of monetary policy. So at the margin, the space is less for Asian central banks, but some countries in Asia, we would say Thailand, India, and to an extent South Korea actually could decouple later this year.
So now this is Stephen Engel. I want to switch gears completely and look at the India election, which you're looking at. How consequential is this, and what are you looking at, especially when Modi's looking for that supermajority? But the BJP has that weakness down in the south, which is where the tech hubs are. It's where manufacturing is. It's where per capita incomes are higher than the north. How significant is it for the BJP to make ground in the south, and how important is this from an economic standpoint?
Right. So as you said, from a political standpoint, we are watching, 18 million new voters who have come in. Women voter participation actually was higher than male participation in 2019. There's been a lot of focus on women voters in this election. So that's something we think will continue. And as you said, BJP, the northern part of India is BJP's stronghold. South is not where we're expecting them to perform that well. But even despite that, most polls have been pretty steady in predicting that BJP on its own will cross the halfway mark, with more recent polls suggesting the coalition is going to get a two-third majority. From an economic standpoint, if the manifesto that is out from the BJP does suggest policy continuity, so more focus on infrastructure spending, supply chain, manufacturing, focus on macro financial stability. I think if the BJP does get a two-thirds majority, then the question will be if they can focus on some of the factor market reforms like land and labor. It will become easier at the margin if they have a two-third majority. But I would say, for some of these politically difficult reforms, it's not just about having the numbers. You have to bring states into the fold. So more coordination between center and state will still be necessary, even if the BJP gets to the two-third mark.
And India has sort of positioned itself as sort of the counterbalance to China. So now I'm just wondering how much progress has been made on that front there. I mean, do you see India overtaking China as the largest growth engine globally anytime soon?
In terms of the absolute growth rates, yes. So over the next 5 years, on average, our prediction is India's real GDP growth will be 7% per annum. Given the increase we are seeing in the investment cycle, the reforms which are aimed at boosting productivity. And this contrasts with our view on China, where given the demographics as well as shifts in supply chain, our view is the long-term steady-state growth in China this decade is going to be a shade under 4%. So within the region, yes, we do see India as a growth outperformer. Size-wise, of course, it's going to take a lot longer. The economic climate that India is trying to grow in is very different to when China joined the WTO. And politically, of course, the structure is very different in India compared to China. Right. So I think both growth models have their own positives and negatives. In terms of the real growth, yes, India should be one of the fastest Asian economies this decade.
So now we're going to leave it there, but thank you so much. Sonal Varma there, India and Asia ex-Japan chief economist at Nomura, joining us out of Singapore. You take a look at when it comes to Greater China. It looks like things are looking much better. Take a look at the Hang Seng. We're at 1.5% here right now. HS Tech is catching a big. We're seeing a lot more sort of traction gaining with some of these tech plays here, really defying what we saw in the U.S. overnight. Shanghai also doing much better. We're seeing more momentum around that. Shanghai Composite is back above that 3,000, close to 3,100 level as well. And we're close to 3,600 for the CSI 300. Plenty more ahead. This is Bloomberg. Well, UBS is set to be planning another round of job cuts as the firm continues to trim headcount following its rescue of Credit Suisse. Let's bring our Bloomberg Intelligence senior industry analyst, Matt Ingram. He joins us now from Sydney. He watches the lenders for us. Can you first tell us a little bit more about where are we in this integration between UBS and Credit Suisse now?
Yeah, g'day, Yvonne. Thank you. Look, Alison Williams, our analyst in the US who covers these banks, thinks we're getting there. We're definitely reaching peak investment. But in terms of headcount cuts, it seems there's a long way to go. To put this in context, the headcount across the world is about 125,000. We're cutting about 100 headcount in this latest round. Yes, they are higher earning than average in UBS, one would expect, given their investment bankers, but the overall target for the bank is to cut about $6 billion from their $25 billion salaries bill. This is a drop in the ocean for that. So there seems to be a long way to go. But in terms of actual investment, they are actually getting there.
Hey, Matt, Stephen Engel here. Obviously, there's this integration with Credit Suisse, and there's the rectifications there and the job cuts. But how much of this is also tied to the other stories that we've been talking about, especially yesterday, Morgan Stanley cutting some investment bankers because of deal flows really drying up between Hong Kong and China and the like. Is there something to be played in this story as well with UBS?
Hey, Stephen. Look, this seems to be more about duplication, and this was always going to be the case when you bring together two businesses that have obvious crossover. The jewel in the crown for UBS when they did this deal and when they took this sort of legacy on board was the wealth management and the private banking, and they can scale those businesses. But when you have investment bankers, traders, etc., sitting in duplicated roles across the globe, I think the real thing here is this is just cleaning up that deal. And we've said from the beginning, Alison said from the beginning, that this is going to be a long, drawn-out process. And it's only after a while, when you see who the good earners are, who the good earners aren't, that you can make a decision about making these cuts. UBS is actually sitting pretty well in the league tables, and their deal volumes are pretty strong this year. So I think this is more about cleaning up the deal and less about deal flow. But certainly UBS has to respond to the market in a certain sense. They are sitting pretty well, I think. There'll be more cuts to come across the trading, and I think the investment banking. That's certainly Alison's read. So yeah, I think expect to see more of this. They're not immune to markets, but I think they're sitting pretty well.
Matt, thank you. Matt Ingram there, Bloomberg Intelligence senior industry analyst, joining us from Sydney here. Here are some of the stories that we're tracking as well. We're talking about Jane Street. Now, the documents seen by Bloomberg show that Jane Street generated over $10 billion in net trading revenue last year. That was among financial markers that the firm disclosed to investors as part of a debt deal it's seeking. It's a rare glimpse into the mechanics of the notoriously secretive firm, which has steadily expanded to make markets in areas including ETFs, stocks, currencies, derivatives, and bonds. Bloomberg has learned that China Wanke is seeking to sell its entire stake in logistics firm GLP, seeking to amass cash to stave off a debt crisis. Sources say Wanke held discussions with parties including state-owned investment company Guangdong Holdings and a Tianjin-based state-owned firm to exit its investment. Wanke bought a 21.4% stake in GLP in 2018 for about $2.5 billion. The boss of Europe's biggest copper company has accused his Chinese rivals of operating uneconomically. Erebus CEO Roland Herring says Chinese smelters are taking concentrates in at unprofitable levels. He told Bloomberg News tariffs may be the answer and says all they want is a level playing field. All right, we're checking not just when it comes to copper, but these equity markets, which seems like they are taking center stage here right now. The Shanghai Composite, we are rising to that 6-month high. We'll see how things play out for the rest of the session, but we're ever more so closer back to that 3,100 level. Plenty more ahead. This is Bloomberg. Let's turn to today's China Brief now. A look at stories making headlines in national news outlets and trending online. A front-page opinion piece in the Economic Daily is calling for coordinated measures to boost the economic recovery, including fiscal and monetary policies, along with employment and industrial support. The piece also says that China needs to cut borrowing costs, taxes, and fees to support those SMEs out there. Meanwhile, Shanghai Securities News is saying that under new regulatory rules, a number of listed companies have adjusted their performance forecast. And it says over 30 firms have actually revised their guidance downward, including 3 listed companies that turned from profit to loss. China's top securities regulator released tighter delisting rules just earlier this week as well, which did roil the markets in some ways. Elsewhere, we're hearing from the Global Times has accused Washington of still lacking sincerity in responding to China's requests, including over the issue of Taiwan. The article was published days after Chinese Defense Minister Dong Jun held his first call with his U.S. counterpart Lloyd Austin. It does point out, though, that while relations have stabilized, Steve, it still remains to be seen if more progress can be made. But it's good to know that at least we're hearing that phone calls are still being made.
The phone calls and also the personal visits are also being made. Of course, Janet Yellen just come back from a trip to China where she did bring up some sticky issues that did strike a nerve with the Chinese, and that was overcapacity, whether it is warranted or not, obviously, in these new industries that Xi Jinping is promoting. But also keep in mind, we're hearing reports that Antony Blinken, the U.S. Secretary of State, will be heading to China as well next week. More of a chance for trust building or basically putting up further walls. We'll have to see.
And you're heading to Beijing next week, too, Steve.
We'll see.
You got a lot going on there, too.
Yeah.
Beijing ought to show the like. So certainly it's going to be a busy week with Blinken there in town as well also. And really, what are they going to say about all these, headlines that we're hearing, whether it's these, tariffs and the like, and certainly we've seen the pushback from the Chinese officials here so far, and that certainly is something that we're watching very closely across these markets here this morning. So in terms of what you're seeing, it's the steel aluminum stocks that we have actually seen some declines here on the back of that, concerns of tariffs when it comes to Chinese steel and aluminum, and you're seeing that when it comes to some of the steel makers here today. In fact, actually, they're turning positive now. You take a look at how the steel makers like Bao Steel are doing. We're up about 1.5%. Oil play certainly is still the one, though, after we are still tracking the declines when it comes to crude markets overnight. And so what we're seeing, those declines, is PetroChina, likes of CNOOC as well. China Oil Services is down close to 3.5% now as well. But overall speaking, though, you take a look at Greater China, we are doing much better here today. In fact, we're around those session highs. We talked about the Shanghai Composite hitting that 6-month high. Hang Seng is up 230 points here as we speak. That's probably what's lifting the Asia-Pac region index here by more than 1%. So we're at session highs here right now. But it seems like overall there is a recovery across equities here in the region the last hour or so. That's it from us here from the China Show. This is Bloomberg.